Hey, do you believe that the future of NFTs is multi-chain? Well, in this brand new episode of the Web3 Creators Podcast, we speak with Ilan Klein, founder of NFT Bridges, and we discuss precisely that. And we also talk about the complexities of bridging NFTs and everything about his journey and in between. So stick with us to the end. It's going to be a great episode. I hope you enjoy it. And if you do, please subscribe and like and follow us on our different platforms. Really appreciate it. See you inside.
You're listening to the Web3 Creators Podcast, where we speak to the brightest minds and builders in crypto, DeFi, NFTs, and the metaverse. Our goal is to give you the absolute best tools for building a thriving business in the Web3 space. Now, here's your host, Hernan Arber. Let's start creating.
What's up, creators? Welcome to a new episode of the Web3 Creators Podcast. We're here and I have a very exciting episode for you. We have none less than Ilan with us from NFT Bridges. We're going to go into the metaverse and the multiverse of NFTs and trying to bridge them onto a lot of new chains. So stick with us till the end. Now, remember, we just launched the Web3 Business Creator course at Web3 Creator Dojo. So be sure to check that out. Join us. And guys, like, subscribe, and comment. This is super important for me. I haven't mentioned it before, but it's helping me grow. I see that, the community is growing. The listeners are gathering up, and this is turning to be something amazing. But I need your help to keep growing. So just support us there. And without further ado, I have with here Ilan. Ilan, how are you today?
Hi, Ilan. Nice to meet you.
Well, for our audience, guys, actually, we've met already in person, and in all full disclosure, we already recorded an episode with Ilan. Right, and I had Ilan with me here in the studio, and I messed up. So I recorded us with one single microphone on Zoom. The quality was so horrible. The sound quality, it was just I couldn't possibly publish that. But here we are with a brand new episode. A fresh start. We are remote now. We're not in the same studio. Ilan came back to New York where you live, right? So let's start. Let's start by you, Ilan. How are you? How's New York?
Thank you, Hernan. And thanks again for doing it again. It's great.
It's a pleasure to always have you and always dig into not only what you're building, but getting to know you better. I understand you're based in Brooklyn?
Yes. The window scenery behind me is
Is it snowing already?
No, but it's really cold right now.
Right. Yeah, well, winter here is pretty chill. I hope it remains like that. But let's talk a bit about just a bit intro for our audience who still doesn't know you. Tell us a bit about your background, how you ended up in the United States, and how you got into crypto.
Yeah, how I got in the United States is a long story. It was almost an accident that has been going on now for more than 20 years. So I guess it's less of an accident now. It's more intentional. I came to New York actually to make a movie. The movie didn't come out, and I stayed and did other things. I got to Web 3.0 after spending more than 15 years in the internet industry and mainly in digital marketing. I actually have a digital marketing company called Park Slope Softworks. And when blockchain exploded a few years ago, I understood that we are entering a new phase. It's like another revolution. And it's good to be one of the people who are building the foundation of it, because many times those companies who take a risk and are willing to go where other people are not going yet, sometimes they can become big, successful, and it's definitely always an interesting journey, and the journey was important to me, so I took it.
So when you got into crypto and Web three, where was it NFTs already kind of a thing, or was it earlier?
It wasn't. It wasn't. Actually, the first time that the term NFT was coined and started to be used, it was after I founded my earlier company, Open Outsource. And Open Outsource developed technology to mint what we call NFTs today, but mint tokens for physical art, which is an ability to identify a piece of physical art and make sure that it is not a fake, it's not a copy, and then track it on the blockchain and make sure of the chain of custody, the ownership of the piece, and help collectors and artists actually be safer and make more money by using blockchain technology when they're dealing with art. So when I started this company, there were no NFTs. NFT started while we were doing
Art,
that.
art provenance for artists on the blockchain, as I understand it.
Yes.
And did you get any traction with that?
So we developed the technology, and actually we had to close the company mostly for personal reasons. My co-founder parents became unhealthy, and he had to leave in order to take care of them. It was really a pity because when he left, we were about to close our first big round and move forward. But we did develop the technology, and the technology is released open source now on GitHub. So if anybody is interested in actually minting NFTs for physical art, you can start where we left it.
So we'll make sure to post that link on the description for you guys to check it out. Ilan, how did you like? First of all, we're not going to get into the details of what happened with your co-founder out of respect, but how did that affect you personally? Like being, building something and having to kind of both understand the personal matter, but also kind of, keep on trying to push the wagon forward. How's that for you?
So it was an experience that I never had to do before. It was definitely something new. As when we were developing the technology, we actually did, and we were part of the first Stacks accelerator. We were the first in the first cohort, and at the time NFTs were exploding, and we did an NFT collection called the Arties, and 1,700 people bought an Artie. It was at the time where on Stacks, I only found it out later, there were less than 500 people in the world that had more than 100 stacks in their wallet. So it was a tiny community. They were really, really noisy and really invigorating, I would say. It was fun to be with them. But they were really little, and there were no big collectors. The markets only started, etc. So I didn't know all that when I did it. They didn't bother to tell me.
What?
We
So
did.
let's get into that first. Why did you choose to launch your first NFT collection on Stacks?
So we actually built the whole foundation of the technology on Ethereum, and we were everything was Solidity, and the smart contracts were working, and we were testing stuff and all that. And again, as the development team and my co-founder were working on the technology side, I was working on funding the company and talking to various VCs and angels. There's a little echo. VCs, angels, and other entities. And then the Stack Accelerator approached us. They, I didn't even know. I knew about Stacks, but I wasn't aware of the accelerator. It was actually really new. We were the first cohort, and we explained to them what we were doing, and they laughed at the beginning. But after laughing, they said, "You know what? It's actually a really interesting idea. We want to incubate it." And they incubated us. They gave us money and help us uh, make ourselves prepared for more than a seed round of investment. They did an amazing job, and I recommend everybody to check out this accelerator. It was life changing for me. I learned a lot, and so this is why we switched to stacks. But we had to rewrite the whole thing. So apart from making the visible change of saying, okay, we will launch the stacks, we had to rewrite the technology. It was a big and expensive endeavor to do so. And so we launched this NFT collection, and we actually sold quite a lot of NFTs on the premise that people who buy NFTs, the investors who buy NFTs, are going to have rights on the platform. They will be able. You had to have an RT in order to participate, either as a buyer or as a seller. So there was going to be a demand for the RTs, and there was a limited number out there. So there was a really very good outview for what's going to happen to the pricing. And while we were doing that, I mean, people bought and sold artists for thousands of dollars. The more rare ones. It was actually the second
On stacks already. That's
on
where it
stacks.
launched.
Yeah, it was on stacks. You know, I got everybody who worked in Open Source got 10 artists as a present, as a thank you for all our hard work. I also got 10 no rare ones. I got the most regular ones you can get. But some people who bought, some of them got amazingly rare ones and they sold them for a lot of money. And I didn't really want to just drop them. And after I kind of had to wind up the company, I for a while, this happened really a year from now. It was a year before now. It was like on last December where the process started. I looked for an opportunity to put value in the artists because open art source was not going to happen for us. And I came up with the idea of doing an art tokenization mechanism, which is a way to invest in art through tokens, through crypto. And then if something is worth, let's say, I don't know, $100,000, and you don't have $100,000 to pay for the great thinking man picture behind you, then you can buy one token, let's say for $1,000 or maybe for
Is
$100.
that what we could call fractionalized NFTs?
Yeah, it's fractionalized art. Yeah, it's fractionalized art is that you sell through NFTs. And as I was working on this idea and actually creating screens and workflows and figuring out how it's going to work and what the tokenomics would be and all that, I did a poll in the Discord. We had a Discord of more than 20,000 people, and asked what people, how many people wanted to do it, and only less than 100 people voted. Like I think 60 something people voted. So you could see that the community were less interested in what we were doing. And I thought that even if, and there was a huge margin for people who wanted to do it. I think most, like 2/3, wanted to continue with doing the art tokenization mechanism, and third didn't want. But it wasn't enough. You could see that there's no real support by the community. So I did what, as far as I know, no other founder did. I actually did a refund for the collection. I hired the company.
You refunded everyone who purchased an RD.
It wasn't that you couldn't refund everybody to everyone because we already spent some money as open art source had operations and had legal fees and had infrastructure and all that. So, but we as people from the company didn't take even one stack from the artist's proceeds, and I did uh, had done. People did it for me. A smart contract that provided 50% refund for people who burned the RT. The minute you burn your RT, the stacks gets deposited immediately into your wallet.
Mhm.
And there was a timeline for people to do it, and hundreds of people did that. And you could see the stacks coming out of the collection wallet. People were doing it for 48 hours, and I believe that everybody who wanted a refund got one. There was a bunch of people who just chose to keep the artist. We advertised the refund on our Discord, on Twitter, etc. So again, I didn't hear about anybody that did anything like that. And I think that this is definitely a way for collection owners who are want to be fair and want actually to continue to support the community and not just take the money and go away. To do a fair type of refund that is governed by the blockchain and is very transparent. So I did that as we finished, and then I continued to develop the idea of the art tokenization and came up that actually to do it successfully, just by it was a numbers game. You gotta have people from different chains to be able to buy token in a specific piece of art, and hence came the idea of creating bridges. And part of the tokenization mechanism would be a set of bridges, and then as I developed the idea, I dropped the tokenization mechanism and was left with the set of bridges because that's actually something that's much more needed and important for Web 3.0. And also, I found out that there's at least two other companies who have art tokenization already working in different ways on in Ethereum, and they didn't do that well. Let's put it this way. You could see that it's going to be challenging to make this company a very interesting one. So I decided to shift and create a set of bridges, and we created the first one. It's a bridge between Stacks and Ethereum, and it is working right now. We just soft launched last Friday, which was the 16th of December 2022. And as we speak, there very much could be people who are transferring test crash banks, which is a collection between Ethereum and Stacks and vice versa.
Okay, let's get a bit into that without getting too technical. Ilan, drive us a bit about how does the bridge work? What's the secret sauce there? Are you because the thing is we're always when we think of bridges, at least in the DeFi world, or with fungible assets or fungible tokens, we tend to think of a bridge as this smart contract where you send the tokens to on one chain, locks them up, and then mints or either generates those same tokens on the other chains. That's kind of the basic bridging mechanism that we know of. That's kind of the traditional way that you go for bridging. Does the NFT bridges work in the same manner, or does it have a special twist, or is there a patent something somewhere there?
So it is still the blockchain. So the technology must be similar. I mean, we didn't invent a new type of blockchain if this is what you're asking me. So yes, we do that. You have an NFT on a specific chain, let's say Stacks right now. You want to have this NFT, you want to sell it on Ethereum. So you, in a way, put your NFT in a lockbox in the bridge. It's like putting it in the freezer. It's not in your wallet. You cannot sell it. You can see it. You can still see it. You can still enjoy it, but you cannot sell it. You cannot rent it. You can't do anything. You can't use it as collateral. And you remint it.
Is it still belonging to you on that blockchain?
It's not in your wallet. If belonging is being in a wallet, then it's not. It is sitting in the bridge. But the only person who can take it out of the bridge is you. And this is, again, maybe something that it's not that we developed it, but we improve upon the way of doing that. As there is, not being too technical, if you mint the collection on one chain, it's really easy to identify who owns what. Very easy. Everything is on chain. But if you move an NFT to a different chain where it was not minted on, it's actually really hard to figure out. If you move it between wallets, it becomes really, really hard to figure out who the owner is and if it's part of the collection, etc. So we developed what we call a bridge monitor technology, which actually, if you want to bring an NFT from a chain that it wasn't minted on originally to the original chain, it actually looks at blockchain data and makes sure that you are the right wallet to do that, and you have the authority to get an NFT out of the lockbox and remint it on the original chain, and obviously it checks every NFT that it has access to through the contract to make sure that it is the original one. It's not a fake one.
So in that case, what happens is that if, for example, I bridged my NFT to Ethereum, then sold it there, and then the person that bought it, he wants to bridge over the same asset onto Stacks back again.
Yes. So the monitor, uh, part of what we have in terms of security is that we don't really give away all the security details of how we do it, but the bridge monitor makes sure that this NFT that is being requested to be moved into the vault and at the same time release an NFT from there to the original chain is actually the right NFT, and the wallet that owns that NFT has the right to do so. And it does that by looking at blockchain data. Part of the data is the nonce, but it's only one piece of data,
Mhm.
and there's more than one monitor on the bridge. There's a few of them, and there's a need for a plurality. There's a need that most monitors, more than 50%, confirm that this wallet or this person has the authority to do whatever they're trying to do.
So I guess my question is, because I'm putting this scenario so that we understand the workings of the bridge, and the situation here is that I originally bridged my NFT to Ethereum and it got locked in the bridge with me being the only one who has permission to kind of unlock it, right? Then it got sold. Sorry. Then the new owner, right, wants to bridge it back. And then the question there is, once it's bridged back to a wallet of his designation, because he's now the new owner, does it get minted again? And then that same NFT, get the one that got locked originally, gets like locked up,
Release.
burned indefinitely? Or do you renew that authorization that you told us that the original owner was the only one that could unfreeze the asset, and it gets not allowed by this new destination wallet that the new owner defines?
Yes. So we do not burn the NFT, if this is what you're asking me. If it was minted originally on again, let's say Stacks, and then somebody bought it to Ethereum, it got sold, somebody else wants to remint it on Stacks, the bridge will know that this person has the authority to do so, will unfreeze the NFT from the lockbox and will move it to the wallet.
Right. So this kind of monitor understand that there's a new owner and then releases that original
Yeah.
permission for the original owner that he was the only one that could unlock it. Okay, got it, got it. Ilan, let's wonder a bit about the use cases for bridging NFTs, because there has been this whole narrative that kind of the Ethereum is kind of the OG chain, and then most of the liquidity is there, most of the market's there, and therefore most of the collections and most of the celebrities, most of the branded NFTs want to build in on Ethereum, not because it's the most efficient, not because it's the fastest or the cheapest, not but because that's where the marketplace is, that's where the money is, that's where the users are. Now, uh, do how do you envision building NFT bridges to kind of to different communities and different chains? What would be that ultimate use case that you envision?
So there are a few use cases actually. I think that the biggest one is what we call the omni-chain launchpad, because as you said before, more than 90% of the NFTs are being minted on Ethereum. There is actually a glut of NFTs. There are probably too many, as a lot of collection find it hard to sell out. And on Other chains, most of the other chains don't have that many NFTs, but also many of them are also relatively small, and it's hard for a big collection to sell out. So if you somebody who likes Astar or likes something else, BNB or whatever, and you want to sell out a 10,000 piece collection, which is a very regular number for an NFT collection, to have a 10,000 piece collection, you're going to find it hard to do, as it's a relatively small community. Even if they're really noisy, if they're really, really patriotic and love then the chain, love the market, love everything around it, there's a limit to how much they can absorb in terms of their collection. So if Hernan was doing, the Hernan's connection, like 10,000 Hernans, different permutations of them, then you could sell, let's say, probably 3,500 on Ethereum. You can send another 2,500 on Solana. You can send another 1,500 on Stacks, and then another 1,500 on Astar, and just create this set of contracts through the bridge that all those chains and all those markets participate at the same time. And you can create as a maker, as a collection owner, you can create the same marketing for all of them, deploy those marketing assets, explain the reason for the collection, what are the benefits, how to do it, and you can sell the collection at one time in all those chains that I mentioned, and in time more. And as you do that, you actually create a very diversified community, because you will get people coming from Ethereum and Solana and BNB and Astar, etc. And right now, there's a huge animosity, as the way I look at it. It's almost like real world politics, that everybody hates everybody and everybody is fighting about whatever, even though you live in the same country, part of the same communities and all that. So, and I think that the people who make chains, the people who develop chains and develop the growth in chain, use this fake patriotism in a way. Like if I'm an Ethereum, I hate Bitcoin. Bitcoin is for all people. And if I'm a Bitcoin person, then Ethereum, they're all thieves and liars and everything is fake, etc. And everybody hates Solana because they're so fast. So
Yeah, well, that tribalism, it's become part of kind of the nature of blockchain because of the investable nature of the industry, right? No one was fighting over, no one was throwing trash if you're using Yahoo Mail instead of Google, instead of Gmail. No one was coming at you and saying, you don't know, you don't understand. Gmail is the OG, is the only one that the mail provider that has value. There was nothing like that in Web2, right? And it's pretty funny, but that also leads us into a very important question, right? Which is, I understand, like, the need for an NFT collection that is built on an alternative layer 1, layer 2 solution, and wanted to bridge over and tap into the liquidity market of Ethereum. I think that use case is pretty obvious. Now, let's try to understand why would a collection like Bored Ape Yacht Club, or what we call a blue chip NFT collection on Ethereum, pretty base with their holders, a strong marketplace, doesn't really feel that need to expand onto other chains? What would a collection like, some of the well-established connections gain from allowing their users to bridge their assets onto other chains, understanding that there's always an issue, a security issue, a security risk with bridges becoming that kind of honeypot of assets, right?
Yeah, I think so. It's a two-part question. So
yes,
let me start with the
one is the
second part.
motivation, the other one is the security concern. So let's split it up. What would be the motivation?
Okay, let me talk about security first. It's more important. So bridges are the weakest point of Web 3.0. This is where you can get in, and it's usually full of assets, and then you grab the assets and you get out of there and you sell them. The difference between, now there's a bunch of bridges out there. We are not the first bridge, but and there's even at least a few only NFT bridges, but those bridges are relatively limited, and many of them have security issues which we identified. I'm not going to name them by name, but so what we did is we created a way where a bridge is as secure as Web 3.0 is. In order to use the bridge, if Hanan wanted to use it, he would have to log in to his Stacks wallet and to his Ethereum wallet at the same time before you can do anything. And then the bridge will verify that the specific NFT is in your wallet, and you have to manually approve that you actually want to move it. And then it will move it to the lockbox. And then you will have to, if you want to mint it on Ethereum, you will have to approve manually through MetaMask that this is what you want to do, that you're willing to pay the gas fees and everything else that goes with it. And only then the minting will happen. At the same time, the bridge monitor is working all the time, collecting data and doing whatever it does to make sure that this is a legal transaction. Don't forget that NFTs, unlike fungible tokens, are unique. So even if somebody came and took a bunch of NFTs, it's really hard to get rid of them because you can notify all the markets, let them know that those NFT IDs are stolen, and then they're not going to sell them as a stolen piece. They will have to get rid of it as a P2P transaction or start their own market or do anything like that. It is hard to get rid of an NFT, unlike regular crypto. So that's one thing. The second thing, for, as you said, blue chip collections, I think if you are a collection owner that cares about the users and want to help them actually monetize and also have more transactions on your collection, it's better for you, if you, regardless if you blue chip or not, to mint multi-chain. And why is that? Because the minute you mint and people start minting on Ethereum and on Solana and on BNB and on Asta, 5 seconds after the first mint, the NFTs on different chains will have different prices, maybe even minute differences, just because of the way the chains behave or the velocity of the transaction or whatever it is. So if I am a collector and I bought 50 NFTs on Solana and I can see that I get a much better price on Ethereum, I'm going to sell them on Ethereum. I'm going to make money. I'm providing an arbitrage opportunities for collectors and investors. And collectors and investors, I spoke to many collectors, like in the last few months. All of them are really excited about that idea. And all of them, when they buy something, they usually buy 50 and more from the same collection. So they're just edging to go and have the arbitrage opportunity they do not have now. So that's one reason. It's actually community care to give your user the ability and the reason to sell and to buy more, the ability to leverage that. As a very big collection that already sold out, I think it makes sense to think about it when you're thinking of the second generation of NFTs. Many of the collections had the great success with the Genesis collection, had less success in the secondary one. And this gives you a much bigger audience, a much bigger canvas that you can paint your marketing on and allow the collection to get more revenues and allow collectors to actually monetize their investment quicker.
You can tap into this precise communities that are also tribal about not only the NFT space, but a particular blockchain that they're supporting or they want to see thrive.
Yeah, I'm thinking that it's going to be better for the blockchain as a whole, not for a specific one, if there will be more cooperation. If you think about it for a second, the world banking system would not exist if there was no SWIFT, the ability to move money from any bank in the world to any other bank in the world that's connected to SWIFT. And that kind of unlocks the value of banking, the ability to move money around, put it where it makes sense, bring it back when you want to. It's all that. It provides a lot of freedom and a lot of opportunity for everybody. And SWIFT I think makes money. I mean, it's a system that pays for itself and more. So the way I look at it is we are building the Swift system for NFTs. We're connecting those chains. You can think about it as banks or whatever financial institution you want to think about it, because I look at NFTs as an asset.
Mhm.
Yes, right now most of them are funny images that we like or don't like and collect and sell and buy and argue about, but there are assets. They are worth something. The value changes, and it makes sense for people to have complete control over the assets, whatever asset it is. And right now, those NFTs are just the beginning, because the way I look at the near future, like a few years from now, everything is going to be an NFT. Everything, whatever you can think of, is going to be represented by an NFT, and those NFTs will move around
I
across.
agree that that's the future. And when you're creating that, I think it makes a lot of sense when you're creating that a large collection and distributing it. It makes a lot of sense having it on the fastest and cheapest chain. So I think one of the largest use case that I can think of for a bridge that you guys are building is, for example, all the airdrops that you get when you get a specific, even when you're owner of an NFT and you get an airdrop from that collection because you're an owner. That airdrop is generally done in a chain like Polygon or like Matic, because of the it's cheaper, faster, or by the chain. Now, I imagine that the ideal use case is, okay, I need to now distribute 10,000 NFTs. I cannot possibly do it on Ethereum without incurring in astronomical gas fees and a huge minting price, but I can mint them in Polygon. And then if the user now has that and wants to sell it and wants to sell on Ethereum because of a specific marketplace, he can do that bridging over. And I think that's a very powerful use case for an NFT bridge.
I think you're right. And also, there is another use case which we're working on, which is connected to the gaming industry, as people, in a way, live in games many times. They play for hours a day, for days, weeks, sometimes years, and accumulate. They accumulate digital goods, digital assets, things that they love, connected to, they fought for, paid for, whatever. But if you want to go to a different game, you can bring it with you. And part of the vision of how NFT bridges will work is that provide bridges between metaverses and games that will allow users to take their digital asset and move them from environment to environment, so you don't lose everything if you decide to switch game or go to another metaverse because you like the company they're better or whatever. So the ability to, we are actually writing protocols now to be able to do this thing of moving digital assets from one metaverse to another.
And what would kind of a success scenario be in your mind for NFT bridges? What would you call a point in the development where you say, okay, I think we're on the right track. This is a large sign of a large scale adoption and success. How do you envision it?
So we are raising money now, and I want to finish the raise relatively quickly if I can. And I want to build 12 bridges in 12 months after I get the money that I need. And if I manage to do that, and then at the same time, we're going to talk to makers, markets, collectors, and create a pipeline of drops from collection going to different chains, and bring new collectors from to new chains, people who were only on Ethereum, who only liked Solana, who did whatever. We're going to help them actually be more omni-chain and do transactions with people like them in other platforms. And we want to be one of the important pieces of the NFT market in Web 3.0. We believe that this type of infrastructure work that we're doing, which could be maybe less sexy than doing an NFT collection or creating a crazy DeFi protocol, is actually really long lasting and will provide services, provide abilities to Web 3.0 to develop, become bigger. It's like unlocking, if we can unlock all this value that is sitting in NFT markets and wallets all over the place without having the ability to get monetized, then we did our thing.
A multi-chain NFT is inherently more valuable than a single chain NFT, guys. Right, write that down. Now, Ilan, I'm going to play the devil's advocate for a second and put my kind of blockchain X Foundation hat and say, okay, I definitely want NFTs collections to bridge over to our chain. We want to promote the use of our specific layer one. We want to bring more users, more buyers. Now, it's worth for me as a foundation to maybe build that bridge for myself from Ethereum or from another chain into our chain, and make most of my efforts into promoting collections and going out and fetching the best collections and telling them, hey, use this bridge that we've built to launch your collection on our chain. We'll help you with marketing. We'll launch in the marketplace. We'll feature you, and the whole 9 yards. What do you think is your unique offering that would make the foundation such like this say, listen, I think would much rather go for a service like NFT bridges for the collections bridging to our chain, even though it's not exclusive to our chain, than to build a bridge ourselves and invest most of our time to bring in collections.
Yeah, so I think to begin, it's good if they do that. It's good if they, the Stacks has something called the Mintery, which is an organization within Stacks that works with collections of other chains to try and persuade them to go and mint on Stacks. So that's something that all of them should have, I think. That's a given, because NFT creates an environment where the volume of transaction grows and you bring new people who are not into DeFi, who are actually more, they love small pictures, and then
And it also creates loyal users, right? Because you force the users to get the token, put it into a wallet, so they already, it's out of an exchange. They're already users in the system.
Of course, so that's a given. But think about it this way: you can be part of the Swift system and enjoy the richness of transportation and liquidity, volume, and all that, or you can decide that you're Iran or North Korea, which is cut off from the Swift system, and they're like isolated islands and cannot do business with any other bank in the world. So as a chain, you can decide who you want to be. You want to be part of Web 3.0, hit it, become, if you actually participate, it becomes almost a competition of marketing and features. Who provides the best condition? Who provides the best support for collections and collectors and makers to actually do it there? Or you can say, oh, you can just do it here and that's it. I'm thinking that when NFT Bridges is successful and have a large set of bridges that can do what I told you before, the other option is kind of lame. And I think that people will understand it and will opt to use something that gives them a bigger opportunity, gives them a bigger ability to create volume of transactions and arbitrage opportunities, which if you only want to build one bridge, you actually don't have.
Mm-hmm. Actually, well, when I think of it, in depth, I think if the NFT standard that you're using to bridge to different chains, it's kind of becomes that a bit of a universal standard, right? Then any blockchain foundation that even wants to bring NFT projects, they actually won't even mind, right? You use our bridge, use NFT bridges, it's all at the end the same
Doesn't matter.
standard, which
Yeah.
can be used on the marketplace, right? I think that's kind of the challenge. If we can get to a universal NFT standard of some sorts.
Yeah. So definitely there are efforts to build bridging standards, and we're looking at them all the time. And we might, at a certain point, turn what we wrote into a protocol. We want a change to support the code we wrote, so making it into a protocol would make sense. It's a little early for us to do it right now, but the way I look at how the market can develop, and I'm sure will, is that to unlock value, you got to bridge. You got to cooperate. You got to be able to give people opportunities where they can make arbitrage and a reason to buy more and more NFTs. And the bridge is an excellent way of doing that.
Ilan, I understand that your community is still sticking with you, even though you guys had to pivot and the NFT market's kind of, on a zombie mode because of the bear market. How do you manage to to get to still have an active community, and or you can tell us what the stage of that community? Do you still have an active, engaged community, willing to try the bridges?
So we are actually doing a test right now, and it is with a collection called the Crash Punks. It's a Stacks collection that wants to bridge to Ethereum and actually get more collectors. They want to get some stuff to Ethereum, market the stuff there, and then bring additional collectors to Stacks through it. The I spoke to there is the biggest NFT market in Stacks is called Gamma.io, and I spoke to the founder of that company is actually an advisor on NFT bridges. His name is Jamil, and he told me that there was the first collection that bridged before us. It was a collection called the Satoshi Bolt. They only built a bridge to move their own collection, and he told me that they not only did they brought the NFTs to Stacks, they brought collectors from Ethereum that didn't know that Stacks existed, and they went there. And some of the biggest collectors on his market came with the Satoshi Ball from Ethereum. Huge collectors, people who buy, hundreds of NFTs a month and sell them. And those are really business people that their business is NFT. So I think that to be able to get communities to migrate with you and the ability to participate in future drops that you do is imperative. Now, regarding the artists, after we did the refund, the new venture is not necessarily connected to the artists, but I intend to offer the artists the ability to get, I would say, benefits from the bridge without having to buy anything. We intend to have a new collection. It's called the Ambassador. It will be the first collection that will be omni-chain drop. It will be the first one which we're going to drop, and I intend to sell everything really quickly. And I intend to give the artists, people who did not burn the artists but kept them and are still hanging on to them, rights and benefits on NFT bridges. So this is my way to actually bring people together and provide the benefits that I opted to provide.
That sounds amazing, and you're sticking with your community for the long term. That's it speaks tons about you as a founder. Now, Ilan, we want to always bring a lot of value and some in alpha and insights to our audience here at the Web3 Creators Podcast. And what I want to ask you now is, what would be your top three or two or three crucial tips or techniques of things you've learned along the way that are key for building a good business in Web3? What would be your top three advices?
And I think the first thing I learned is if you do Web 3.0 is about community. That's what I understood.
That's a strong one, guys.
That it's about community. So when you build and have to manage a community, it's not a one person thing. I'm talking about myself. It's not a one person thing, but so if you manage the community, you should think of yourself as a CEO of a public company that has to get the input from all the shareholders all the time through Discord or whatever platform you're going to be using. And you're probably not getting a public company CEO salary to justify that, but you have to actually take care of the community. You have to listen to what they have to say, even if you don't like it. And believe me, many times I really didn't like. You can see conversation on Discord. I'm definitely unhappy, but you gotta be really patient. And if you have a point to make, you make the point, and you need to be able to persuade the community that what you're doing is for them. So for me, it was easy to do because I never took even one stack, not even 1 cent from the money that we raised. Nothing came to me. Everything was spent on building things, on trying to do what we promised to do. So it was easy for me to talk about what we're doing and why we're doing it, because again, I was very whole in a way. I looked at it as something that needs to be done, and I'm just a person who's doing it for everybody. Also, it's really important not just to notify, but to ask. And because I asked, we didn't go for that project that the community didn't care about. And I'm hoping that they will be interested enough to participate in NFT bridges when the time is to provide benefits for them. I believe they
So
will.
I think that could be tip number two when we're saying, listen, if you build a community and you have people to ask it, that's the best way to validate your ideas is to brush up with the community, actually ask them, and then take notice of the response if you have an active user community and as to what you're building. So in short, kind of try to validate your idea before you plunge into building, right?
Definitely. And I think the last thing is resilience.
What?
Is resilience. You have to be resilient.
Resilience. Define resilience for us.
Look, the easiest thing was after the open outsource ended was to let go of everything and just do completely something else. But I didn't. I wanted to actually try and provide for this really large number of people who supported and invested and all that. And even though it was really hard to do and very tempting many times, I was the only person who was left in open outsource. Everybody left. I was the only one who actually cleaned up everything after everybody left and continued to take care of the community. That's not an easy task, and it's not fun. So I think that you have to kind of have the grit to continue, figure out what is the best thing for the community. At the end, it had to be a refund. I mean, it's not ideal, but it is definitely the fair thing to do, and I did that. And by the way, after I did that, we released all of the open source, all of the open outsource code on GitHub. It's open source now, and people can continue to build on it if they want. So in a way, we're giving back to the community everything that we worked on, and that kind of helped me to actually move forward and figure out what make sense to do. So don't give up and continue to kind of work your mind around whatever challenge you think is interesting and figure out how to do that.
That's amazing. So never give up. Keep pushing forward. It sounds cliche, but it's crucial when you're actually building a business. Ilan, let's tell our audience where they can find you guys, NFT bridges, where they can contact you. Maybe if not personally, where they can follow you. What are those links?
Sure. So NFT Bridges is nftbridges.xyz. You go to the website, you will see us. There is a little form if you want to fill it up and send a message. please be my guest. Do that. We'd love to talk to you. I am Ilan K at Ilan K on Twitter. Easy to find. NFT Bridges is NFT at NFT_Bridges on Twitter also. We have a Discord invitation. We can add that. We can add the link to the notes of this podcast if people want to join the Discord and discuss there. I think those are the easiest way to find me and talk to me.
All right, this sounds awesome. And guys, get involved. Check them out. NFTbridges.xyz. I think Elan's onto something. They're building something cool. So I'm gonna wish you the best of lucks and huge success, Ian, for NFT Bridges. I'm sure we're gonna find a way to collaborate in these projects and many other to come. And I want to thank you very much for coming on the show. This has been great.
Thank you so much, Enan. It was a pleasure to talk to you. And thank you, everybody, for listening. I'll see you soon on NFT Bridges.
Thank you, guys. And go check out NFT Bridges. Join us at the Web3 Creator Dojo, guys. You know what to do. And this has been a great episode of the Web3 Creators Podcast. So see you soon. Thanks, Ilan.
Bye-bye.
Bye.
Please keep in mind that none of what's said in this podcast should be considered financial advice. You are strongly recommended to do your own research and do not take anything we say in this podcast as a recommendation to buy or sell any assets whatsoever.
Thank you for listening to this episode of the Web3 Creators Podcast. Make sure you follow us on YouTube, Apple, Spotify, and all of your favorite platforms. And if you're serious about building your own Web3 business, head over to web3creatordojo.com and check out our courses. That's web3creatordojo.com. See you soon, creators.